All right, cool. We're live. Well,
Excellent.
welcome to the show, Dion. How are you?
Good, good. Thanks for having me. It's been a while since we talked to you guys, so happy to be back.
Yeah, we
Sure.
last we saw you in Cannes, right? So that was when was that? That feels like a long time ago now, actually. But
Feels
that
like a
wasn't
long time,
actually.
like a month, maybe month and a half.
Yeah.
It's because in crypto, time just moves at ultra speed, except maybe in August. I don't feel like we're moving in ultra speed anymore.
Yeah, I mean, I'm talking to a lot of, especially European projects. Everybody's off this week, so
Right? I just noticed volumes are kind of, how's the volumes looking at, well, I mean, maybe you should just say where you work and what you do for the listeners.
yeah. I'm CEO of Term Finance. Term Finance is fixed rate lending protocol on EVM chains, primarily ETH mainnet. If you're familiar with Aave, it's very much like Aave. You lend and borrow against various ERC20 crypto assets. And the key difference is we enable fixed rate loans. So the rate is fixed for a fixed period of time. And the primary way that we match borrowers and lenders is through this weekly auction process that we modeled off government bond auctions.
Mm. Cool.
But,
Yeah, I guess I mean I don't know much about this. I've used like on DeFi, I used Aave a bit just to leverage trade because I want to just be on DeFi, right? And Spark, I guess. And I noticed on Aave there was a fixed option uh on Aave, so you can have a fixed rate on your loan. But honestly, even just the way they presented it, I just had this feeling like I was going to pay too much. So
yeah,
how
they
like
didn't have
yeah.
they had the stable option for a while. They got rid of it.
Oh,
Um, I think, a couple of issues. The first one, there wasn't much traction because the rate was typically significantly higher
mm,
than the variable rate. And it wasn't truly fixed. So it's fixed so long as, it's like 99% of the time fixed, but,
oh,
it wasn't guaranteed fixed rate. There could be situations where liquidity is not insufficient and they would have to break the stability. And I think the last thing was, I think it was like 2 years ago, they weren't hacked, but they discovered a vulnerability with it.
mhm.
So they just kind of nixed the whole thing.
Oh, I see. Because if you say you have the fixed rate 99% of the time, then it kind of sounds like you're not gonna have it when you need it.
Yeah, exactly. Right.
Which is the sort
Yeah.
of if it's like the whatever sigma event, right? That's when I want my fixed loan. It's when the rate would just when the rate would suddenly be 150% annualized, and I'm sitting on a maybe a huge loan for my taste, and now I'm like I'm not sure. Yeah,
Yeah, there's some saying like liquidity is always there except when you need it. And yeah, that's
right.
exactly the same
You're
thing.
using this to leverage trade. You can't just pay it back because like you it may not be
You're
that
locked
easy to
in, yeah.
unroll everything.
Exactly.
Okay, so we were actually talking about recording last week, so I opened up. I think I opened up a little loan with
Oh,
you
you did.
guys. Yes, I did. It was very, very small. It was just
You
what
went
would I
through the
have like
whole
little.
auction process.
No, I just picked the first one. So I guess so, yeah. I did it
Okay.
like 3 minutes before for the recording. So if I have time now, I'm gonna check on the status.
Cool.
You guys also recently you're expanding to different chains, right? I saw there's been a bit of movement there. Is that like how's that going so far?
Yeah, so we've been on Avalanche now for about a year. And that's doing very well. Recently launched a campaign with the Avalanche Ava Labs.
Hmm.
Um, got some curators involved. Since we last spoke, we really started, refining the way that liquidity enters the system. Going through these auctions is great for power users, people with dedicated DeFi managers. But for average passive user, big or small, it's not that convenient for them. So we created vaults, have curators who come and manage essentially fixed rate loan portfolios on your behalf, as well as the blue sheets where you can just come and pick a loan and you don't have to show up at a specific time of the week for the auction. You can just come in whenever it's convenient for you. But yeah, we launched this new vault on Avalanche, got a lot of traction there. And so Avalanche has been great. Recently also launched on Base. It's still a little bit quiet there, but working on some interesting things there behind the scenes to get activity going on Base.
Edmund from Avalanche. He's a friend of the show and a friend of us. I'm checking Avalanche. The Avalanche token has not been doing amazing lately. So my feeling is that when Avalanche starts pumping,
That's the
this
top.
cycle, you have to be super careful. I think when AVAX pumps, like it doesn't mean it's over, because I don't know what the saying is. I mean, you're from TradFi, right? But it's like the most meat in the market is definitely towards the top.
Exactly.
That's when people get ultra rich, when it's like is 10 million enough to retire, all this
Right.
stuff. That is in like the top, not in percentage of the movement, but in the time.
Yeah.
It's like this tiny
That's when it's fever pitch, everybody's just like all in.
And just like compressing.
I mean, even recently I was looking like Cardano's almost back at $1. I didn't think that would ever go back up.
I was getting worried when XRP started pumping.
Yeah, me too. That is I've seen so many shills on my timeline, and I'll keep getting targeted with like occasional BitLord stuff where he mentions XRP again. That's like a telltale sign that I'm not sure. It feels a bit toppy.
I like the one that somebody mentioned on my timeline. They said, and I do the same thing. Whenever my normie friends, like gym coaches, people I know, just like from different social things, non-crypto people. So eventually they'll figure out that I work in Bitcoin or something. And they'd be like, oh yeah, I have some like XRP or some this and that from a previous cycle. What do you think?
Yeah.
And I say, I don't know, man. It's so hard to say, but I mean, it would be safer maybe just to have Bitcoin or maybe sell it. I don't know. And then every time I'm always wrong, right? These guys are outperforming me every time, because they're just sitting out there.
They just ape into whatever is new.
They just ape in too late and forget about it and wait for one cycle, and then they hear about it from their friends and they sell the top, or they don't. So they actually perform really well. It's this they're like Ray Dalio maxing. No, sorry, not him. Ray Dalio maxing, where you don't look at the price so much, or like Taleb as well says this, that like if you look at the thing too much, you can make bad decisions.
No, it's true. Just kind of sit there, forget about it. It reminds me of the last cycle. I was at NFT NYC here in New York. A kid, really young, he was hanging around, and he was just telling me how like the cycle before that, he's messing around on Binance, got an airdrop of some BNB tokens, forgot about it, and then I was like, post-COVID, all of a sudden he's like, oh yeah, I'm like a millionaire now, just airdrops. I'm like, oh, that's awesome.
He just got a huge BNB airdrop at, I guess, when it was, what would the price have been?
Yeah, when it was just like a new exchange, trading around, he got some tokens, he didn't sell it. I think I had got
a millionaire now.
Open, but I think I sold it right away. What do you do? Just hold on to it.
You, as well, the craziest thing is you look at like the BNB price. I'm gonna pull up this chart on here now. Kind of nuts when you actually think about it.
BNB is one of those things. I always stayed away because it was too high. So I've been staying away from BNBs because it's too high for like 1000x, basically.
But that is nuts. Like,
Yeah, it was right
how
there.
have
It
we
was
got
like
to this?
around 2021. Yeah, I think the conference is like 22. And yeah, you just woke up one day, it's like, oh yeah, I forgot about these BNB tokens I had.
Amazing.
And it's weird because it's there's no ceiling. There's no easy ceiling to identify for Binance as a business for me. Like I don't, because they can just make new things.
And
Like
they're the most valuable crypto exchange, so crypto becomes a thing.
yeah,
Yeah.
right. And why can't they, if they run out of shit coins, can't they just like do TradFi stuff? Or I don't know, be a bank. I don't even know.
Yeah, I mean,
What's
they got so much money now.
what's your take as well with them? Like, because I see all the major exchanges now are just really trying to compete for the American market, and like it's not clear to me like who the winner is. um, I'm really enjoying Kraken's social media these days. I mean, the exchange has kind of been the same forever, right? And it's since
Yeah.
but I kind of like, it's kind of getting spicier again. But yeah, there's no clear winner yet, I don't think. I mean, volume, especially for that market.
I think in mindshare wise, I think Coinbase has the lead. But you see like their recent revenues are not doing that great.
Yeah.
Are they doing a PayPal thing? Or are they just like,
they got so many things going on, right? They got this like USDC partnership, they got the base chain. I mean, I think they're the most recognized US exchange. Everybody in the US who touches crypto has a Coinbase account, not necessarily Gemini or Kraken. But even then, like they're not seeing the same kind of flows that you see in Asia. Like the level of speculation on Binance is just like a different kind of level. The perps and all that other stuff. It's just they have the US and then Binance has the rest of the world. Right? They have Africa, Latin America, like Asia, everywhere.
Interesting you mentioned that about the base stuff, because we talk about this a lot, right, Andreas? Like talking about base trying to muscle in on Ethereum's lunch, I guess. Like as someone like kind of in the DeFi weeds, like what's your take? Do you think there's like room for both, or do you think that base is looking to max extract from Ethereum eventually?
Honestly, I think it's going to be hard to. I think the whole L2 idea is really funky to me, because crypto or blockchain specifically, I think has really good product market fit for finance, for DeFi. Right? It's slower than traditional Web2 databases. It's more expensive because you need multiple copies and validators of the same thing, redundancies. So the only reason why you're willing to tolerate slower transaction speed and more expensive transactions is if you're moving around millions or tens of millions or hundreds of millions of dollars. You're not going to do it if you're playing a video game or something like sending tweets. The problem with that is if it's all about size and volume, then you don't really want to fragment liquidity. When you have L2s, they're trying to fragment liquidity. And what you see is most of the liquidity still stays on L1, on mainnet. So it's hard, right? These L2s have to do their own distribution. I don't think they get some bridging volume from mainnet. But a lot of times it goes to L2, then it gets bridged right back. So L1 is still where people like to hold the vast majority of their assets. So I don't think it's that competitive, right? Ultimately, if Base is going to do anything, they have to bring on their own users. And anybody who's deploys, like us deploying on Base, is more towards an eye that, look, maybe there's a bet that they'll be able to bring their institutional users onto Base by creating easier on-ramps, and we can access those new users that are being onboarded through Coinbase.
My tinfoil hat theory is that they may not be planning this, but to me, this seems like a no-brainer that that Base should just grow as much as it can as an L2 on Ethereum, and then And once it reaches like escape velocity, it will just seem like a natural choice to take ownership of the whole, like vertical integration, to take ownership of the whole thing and just be an L1, can make the fee token their own coin or USDC, whatever, right? Because even USDC would be great for them. So uh, I just get this feeling at some time it's like they're just not going to need Vitalik anymore, and just take the TVL and go away.
Isn't that what Circle is doing? I don't remember if Circle's ARC chain is L1 or L2.
That means we have full DeFi. If you don't know what's an L1 and an L2 anymore, that means
yeah, it's all kind of the same thing. Yeah, no, the ARC chain is so Circle's new chain is going to be L1, so they're kind of already jumping one step ahead, frogging it.
And how much of Circle does Coinbase own? Like what? How much is this?
I think they have a revenue share, so they don't own it, but they have a revenue share. But I think there are exit clauses where Circle can end that contract if they wanted to. There's probably some conditions, but for now they're still pretty closely linked.
I mean, who do you think is going to end up buying who? Like, what is the bigger business? Is it the stables or is it like Coinbase's 78 products?
Honestly, I think let's look at Tether. Tether is huge. Tether's revenue like rivals JP Morgan.
It's so crazy,
has like over 100,000 employees. Tether has like what, like maybe 30. So the profit per employee is massive for stablecoin.
Same with I'm a bit of a Hyperliquid maxi just because I like the website.
Yeah,
I think I like it because I like it because it reminds me of FTX. It's like very easy, just press the key.
Yeah,
and it has this like vague. It's DeFi enough, so I feel like I'm decentralized. I know at the bottom of my heart that Jeff controls my money, but I feel a little decentralized.
Just a little bit, yeah. I mean, it's probably one step above, purely centralized.
Yes, and that's also an insanely profitable business. And how much is their market share on perps?
I think it's probably still pretty small, but they get a ton of. I think they get really good users that are non-toxic flow.
Oh, okay.
The speculators, so there's a lot of money there.
Because I was just because you were saying Tether has like 30 employees, whatever, right?
Yeah.
Hyperliquid, I don't know what that is, but if they do, maybe it's less than 5%, right, of the volume of Binance. But with how many people? Because Binance is a huge organization, right?
Yeah, I'm sure they got tons of people.
But
I probably don't need all those people, but they have a lot.
Yeah, they have all those people who go to the BNB meetup, the BNB meetup in Africa.
Yeah, exactly. That whole army of them.
Yeah. So I suspect maybe we're just going to see a lot more of these businesses that just scale infinite. Because, like when Google came out, everybody was like, dude, I heard half of the employees are engineers. They can just scale infinite, make infinite money. They don't need more people. That's nothing. Tether, like you said, if they have 30 employees, that's what it takes. Or Hyperliquid, how many more people do you need? Even if they become half the market, right?
Yeah, just sit and clip the coupon.
Or like Term Finance.
Yeah, just the money machine.
How many people do you need?
Right now we got 7 full-time guys.
Does that feel big or small?
Honestly, even with 7, sometimes I can't even keep track of everything. So I think we're pretty close to the limit where you don't need a second layer of managers.
Yeah.
But anything more, now you need a second layer, and then you start losing information. Communication's no good. So for now, I think this is a good size for us. Everybody knows everybody. It's still pretty tight.
Oh, you dropped off there, Andreas, when you rejigged your. Can you speak?
I was just saying, you guys will fit nicely in the minivan. That's a good. That's a good metric.
Yeah, I really like those Asian minivans. They don't sell those, the Toyotas.
Boss
They're
van.
branded. They don't sell those in the US.
No,
Like, I don't know why, but those are great cars.
we have occasional host of the show, Jason JMO. He's a big fan of the boss vans. So he says the alpha is that I think there's a new Lexus. Is that correct, Blake? The new boss van?
I can't remember if it's I can't remember if it's a Lexus or not. But yeah, I
I think
remember that it's leveled up, right? What was it before? The Alfred?
the
No,
Alfred. Alfred
is
is
that
the
what it was?
previous one, but
Yeah.
supposedly the Lexus. So you must be able to get that in New York.
No, this is the thing. They don't sell those. I was looking into this because I was just wondering why don't they sell these in the States? And I think it's because of the crash test regulations. You need more room between the front
Yeah.
of the car and the driver, and those cars are kind of sitting right on top of the engine, so they don't pass the test here. So like they have these long hoods in the U.S. They just like look ugly.
Kind of wish I didn't know that.
Yeah.
Yeah, it's a random rabbit hole I went down on ChatGPT the other day.
Oh, good.
But it's kind of worth it for the comfort, that the way you can work in that, you can literally have it as like your portable office. You just be driven around by your driver.
Yeah,
all
you
day.
have to do podcasts in there during a road trip.
Yeah. So where are we at in the market? I've seen this cycle. Let's throw that out there because things are looking a bit all over the shop right now, and my timeline is very divided, I think. But yeah, Dion, what's your take?
So my view, last year in December, did a little bit of analysis on from elections and how an average price movements after presidential elections in the U.S.
Mm-hmm.
And so based on that, it's a small sample size. We had a sample size of 3. And projected, Bitcoin to hit around 160 to 180K. Timing, it probably should have happened around now, but the timing is not exact. So I still think we can get to 180K, even if it's briefly.
Okay, Blake, this is the clip of the show. He said Bitcoin is going to be 180K.
Yeah,
that's a solid prediction.
That's my call. That
I
will
love
be
it.
Yeah, that's the money shot.
I like that. I like that one. No, I'm also very hopeful. How do you feel this whole cycle has gone? How far are we now? I lost track.
I think this is going to be a drawn out cycle because a lot of it is usually driven by interest rates. So when the Fed cuts interest rates, Bitcoin rallies because the dollar cheapens. When they raise interest rates, the dollar strengthens, and all assets, including crypto, tends to fall. So you see, when they cut interest rates during COVID, crypto assets mooned, and then after a year, they started raising interest rates, and then we had the bear market. So everybody's expecting the Fed would cut rates already by now. But this whole tariff thing, the Fed's taking their time to cut rates. So until they cut, I think that once they cut, that's when it really goes up. And given that they've been dragging their feet on cutting rates, that means there's still room to go. We're just kind of waiting for them to, put their foot on the pedal. So I think there's potential. It's just a question of when or if they'll do it, right? Because right now you see inflation starting to go up. On Twitter,
is that just all the tariffs?
It's partially, yeah. A good portion of that is tariffs. People are showing Costco beef prices doubled because a lot of these imports from Mexico are now being tariffed. So that might kind of delay the Fed cuts, but it's good because that's potential energy, right? As long as rates are still at 4.5, that means they can always go lower. That means Bitcoin could go higher. And even if they don't cut, the reason they're not doing it is because the inflation is too high. So another reason to own Bitcoin. So it's kind of in this environment, you either own it for the short-term stimulus or you own it as a long-term hedge, because you're not going to be able to afford beef anymore in a few years. So
that's a really good way of putting it. Yeah, I'm a macro denier because I just because I don't have a TradFi background. So I just sit around hoping that people would just buy Bitcoin because it's, for more libertarian principles like harder money and so on. But it seems as the years have, as the more and more people learn about Bitcoin, I guess it becomes just another thing people gamble on. And then we're stuck with thinking about interest rates and thinking about inflation. And I guess the same thing.
Yeah, no, I think it's both, right? Because I think it's more institutional. Like now with BlackRock ETFs, you have a lot of institutional money, and their money is definitely moving in and out based on where interest rates are, where macro is. So you always have the core holders; they're just going to hold no matter what. So you don't need to worry about those guys. Inflation, no inflation, rate cut, no rate cut, they're holding, and you're just kind of worried about who's the marginal buyer, what's influencing them. But this cycle's been great in terms of adoption. I think tons of institutions are now in with ETF. Retirement funds can now invest in Bitcoin. It's like impossible to do that before. So I think there's still room for adoption though, right? I think out of let's say you think Bitcoin, if it were a mature asset like gold, should be 5% of everybody's portfolio. What is it now, right? I did math.
That would be insane.
Yeah, I did this math before COVID, and the number at the time was based on the number of Bitcoin, was each Bitcoin would be worth 250,000, right? Which is 5% times total invested assets
Okay.
divided by 21 million Bitcoin, that would be worth 250K. Keep in mind, like money supply since that time has like more than doubled or tripled. So, that number could be more like 500 or 600K by now.
And when did you do this, the math?
It was like around COVID, maybe before COVID.
Before.
Yeah, I just kind of look up what is total investable assets in the globe times 5%. That should be the market cap of Bitcoin, right? If you kind of use that simple math.
And once we reach that 250K, then like who's going to buy our bags? Like the next cycle after this one, say this drags out another year or something, and then all these leveraged corporate treasuries blow up and take us down with them into a little bear market. Then for the next one after that, like who's going to buy our stuff? Are we going to have to go to different planets? Who's left who's left to buy our bags? Like what's the upward pressure? Is everybody have 5%?
I mean, I think like if it gets there, then it eventually just becomes like gold, right? So it's widely, at some point, everybody accepts gold as being store of value. And at some point, everybody will accept Bitcoin as a store of value. But there's always a bid for gold. And, again, then we get to more macro. It's like, all right, what are interest rates? What's inflation doing? But, somebody was talking about over the last 10 years, gold has outperformed S&P 500. So
Man, that's like that's gotta hurt for all these geniuses, all these like MMT, whatever, these modern portfolio people, and who else is all these like Warren Buffett, all these maxis been telling us for 20 years.
You're right. It's like you say, just buy and hold, and buy and hold is the best strategy. Just keep it simple,
Yeah, I guess.
You're dropping out a bit there. No, you. When you rejig the AirPods, just.
Okay.
There we go.
I was saying. Yeah, I mean, I guess owning the S&P 500 is much more complicated than owning gold. Or
most
just
of much easier to hold gold.
Or holding Bitcoin.
Yeah, exactly. So I think even if everybody adopts Bitcoin at some point, then it just kind of converges to something like gold. And that's still not a bad investment.
What you guys mentioned the treasury companies there. I mean, that's I know your stance on this, Andreas. Dion, what's your take on this surge of surge of treasury companies across everything, right? It's not just BTC. You've got ETH treasuries, Solana treasuries, everything.
Hello.
Yes. I was speaking to these guys that were kind of involved on the ETH treasuries, and he's explaining kind of like why it's so popular.
Yeah.
And it's like the perfect trade. So, think about all the players involved. So it starts with the investment banker. Investment bankers, they bring these stocks to market. They do IPOs, they do pipe deals, they do convertible bond issuance. So there's a bunch of fees to be made by the investment bankers. Then you think about the convertible bond holders. Why are they willing to do this? They get the call option on the underlying stock, and they can trade that volatility. So it's super popular with market making shops. So a lot of these big market makers are huge lenders into the convertible bond. So they're happy, they're making money. And as you know, these underlying stocks are super volatile. So there's a lot of money to be made trading the volatility there. Then you think about the pipe investors, people who invest ETH or Bitcoin into the treasury. Why do they do it? Well, these treasury companies, they trade at massive premiums because of speculators. So they're able to invest, 100 cents on the dollar and then flip it for, 5x profits once the meme traders come in and bid up the token. So they're happy. The treasuries are happy because now they have a whole bunch of assets and they can farm it and earn yield. So it's like the one trade that everybody's happy, right? Who's like the sucker here? I guess it's the meme traders. They're the ones that are driving up the price and making this whole thing possible. But yeah, everybody else's incentives are aligned in the same direction. So it's one of those rare transactions where it makes everybody happy. Everybody's incentives are aligned. So it's working pretty well. I think where it'll kind of slow down is if that premium starts to decline. So it's like the first ICO massive jump, and at a certain point, everybody copycats that trade. And the last IPO of the cycle or ICO doesn't make any profit anymore. So I think they'll keep on running this trade until like that premium normalizes. But it's been great for the DeFi ecosystem, right? Because a lot of these treasuries now have a bunch of assets, especially ETH treasuries, and they're very open to deploying into DeFi. So I think that brings like institutional capital into the DeFi space. So I think it's good for the ecosystem.
Are you feeling the deposits on term finance from these treasuries yet?
They're still like just starting to get onboarded, but we're getting some reverse inquiries, see how they might be able to work with us. So I think it's very positive.
So this is like I guess for you guys, because your product is pretty advanced for DeFi natives. Like people who don't understand traditional finance, it might seem a little complicated, complicated without the vaults and stuff. But for people coming from TradFi, your product must be like the easiest thing to understand ever.
Yeah, it's super simple. If you have like a dedicated treasury manager, it's quite easy. And I get it. Like even I have a day job. I don't have time to do these auctions. I have other stuff to do during my day. So unless your profession is to trade, borrow, lend as a living, you're not going to have time to handle it. So, but yeah, with these treasury companies, and it brings in these institutional capital that do have dedicated managers to trade on the protocol. So I don't know. I would say perp trading is just as difficult. Like you got to sit there and you got to watch every tick. Like, oh, if it breaks this level, I'm going to sell. And like, it's a lot of management as well.
But the nice thing on perp trading is that nobody watches the funding rate, so you have one less thing to worry about.
That's a problem, isn't it? Because I mean,
ask anybody who does not have a background in finance if they're long on perps, right? Just ask them like, oh, what's the funding rate been like? No No
No
one
idea.
has. They have no idea. I've never looked at it.
And they
But-
purposely make it
That's so
hard. I
true.
remember even on FTX, they would quote like the 1 minute APY, so it's super small. I'm like, I can't understand that. Like, how do I analyze this to like a real rate that makes sense to me? But they
And
make
on-
it super hard because they don't want you to know.
Yeah, and on Binance, they show it per funding round, I think. So
Yeah,
it's
an
like,
hour.
oh, it's like, well, it's 148, right, on Binance.
Right.
Depends on the market, but nobody, especially like normies, they're not going to understand how much is 0.000051% per 8 hours. Like, what does
Exactly.
that come
Yeah.
to?
There's no way to understand it. But yeah, I mean, honestly, we get on term and DeFi in general, a lot of that borrow flows over when funding rates get high, right? So the funding rate gets to 10, 15%, people realize, oh, I can just borrow stables against Bitcoin and buy more Bitcoin. And it's the same idea.
Mhm. Yeah.
So it does ultimately flow through into DeFi, but there's a little lag there.
Oh, now I was thinking about with perp trading, because the thing with perp trading is that when the market is going up, which is when it's fun to be long, the funding rate is terrible. It's super high.
Yeah.
Actually, it's would be the opposite. But
Yeah, it's super
no,
directional.
yes. So then you can do like quarterlies, and now there's no liquidity, right?
Yeah.
The open interest on quarterlies. I haven't checked OKX lately. Maybe it's better than Binance, but it's not amazing. So
It's
then
pretty good on, I think, on the CME, but then you have to be like on board with the US broker and all that.
I don't even know what that is. Is that the Chicago Mercantile?
Exchange, yeah. That's the big
Yeah.
futures exchange in the US.
Yeah. No, I was kind of joking. I do know what it is, but I've never owned I don't think I've ever owned a stock. Like I don't have no, I don't even know. Don't know. I have an account with Interactive Brokers because I did an FX sold a house one time.
Oh,
But
you can do futures on an IB. They're actually very cheap too. They're very
okay.
IB's
But
great. They give you like institutional rates.
yes.
Yeah.
Yeah. If you ever need to convert like some amount of fiat, it's amazing. I tried to look at what the spread is. You can't. It's hard to calculate because it's not like it's like
Yeah,
I don't know if it's
IB.
even less than a bit.
Yeah, they're actually a great product, great company, great product.
What would you ever do anything that's not well, fixed rate loans?
You know, one thing we're kind of like playing around with is kind of borrowing that crypto strategy or digital asset treasury strategy, at least on the convertible side. Right. So convertible loan is you make a loan. If the underlying stock goes above a certain price, you can buy the underlying stock. It's like a call option.
Mm-hmm.
Right. So it's like a fixed rate loan, but you get some upside on the underlying. And that's actually pretty easy to code up on chain. Right. So imagine you made a loan against Bitcoin, but if Bitcoin hits 150K, you can buy it at 150 and then sell it at the market price. So now you got something a little bit more interesting. I think it spices it up a little bit for lenders. Right? Because a lot of guys, especially the speculators, they're not interested in making 4 or 5%. But if you throw a little call option on top and they got some upside, like now it's like an interesting thing to trade.
Mm-hmm.
And the market makers now, they can trade around because this thing is starting to move a little bit. And that causes trading volume, that generates more fees. So that could be like an interesting product that we're kind of playing around with.
Yeah, I like those because in crypto natives, they always want massive upside, right? Even if you tell me, oh, I think it's almost guaranteed that BTC will go up 30% over the next year. I'm like, 30%? I'll get into AI then. I'll just do something else. That's nothing. So
Yeah.
I feel like for crypto natives, you have to just create these things where they can at least possibly have enormous upside.
Exactly. And I mean, imagine you can do this with meme coins too. So now there's real upside, and you create willing lenders who otherwise wouldn't lend against a meme coin because now you're giving them a taste of the upside. So yeah, I think this will be interesting because right now, like there are like two types of users in DeFi. I think you have a trader group. They tend to trade perps. They trade meme coins. And then you have the DeFi group, the yield farmers, who just sit there and clip yields. And
Loop.
so, when we find a product that kind of merges those two communities, I think this might be able to do something like that.
Yeah, because I'm sure I'm in a bunch of these DeFi groups, like some with friends, some with kind of people I don't know. I'm sure you're in a lot more than me. So yeah, they're just like, they're talking about points, they're talking about looping. You're
Exactly.
like talking about Pendle.
That's the way to go. Exactly. That's the world we live in.
Yes. And then I have other friends, maybe not as intelligent, but to talk about Next Screener and Pump
it's like
Fun
two totally separate parallel universes.
I like that.
Once you get into sorry,
I
was just gonna say the Pendle stuff. I feel like I'm relatively well versed, but man, that what the hell is going on with half the stuff on there? I'm like, is literally. Does that seem easier if you come from a TradFi background to understand what's going on there? Dion, I'm just intrigued because
the Pendle thing actually does kind of mix the two communities. So what they do is they take like a farming token. There's points, right? You're gonna get some airdrop.
Yeah.
But you got a bunch of people, institutions, they don't want airdrops, right? Because that's kind of a gamble. They just want the sure thing. And then you got retail, they want to gamble on the airdrop. Because there have been a few good ones where you really made a lot of money. So what they did is, let's split this. Let's just take this thing that's got points, split it into two assets. One of them, you're buying the points. The other one, you're just buying the yield. And so all the institutions pile into the yield, and then they get influencers, they go shill the TGE, the token airdrop, and they get retail to buy the yield portion. And so you're basically buying a lottery ticket, right? Because you can buy these things pretty cheap, highly levered. And if the airdrop pans out, maybe you're making 5, 10, 15x. If it flops, you lose all your money. But you kind of got like a lottery ticket on an airdrop. So that's ultimately what's going on behind, under the scenes, under the hood, is you're just splitting the speculative component, making it easy for retail to buy, and then the residual yield goes to the institutions who just want to lock in, kind of like a sure thing.
What's a good example of a token where people do this?
One that worked really well was Athena. So Athena does the basis trade, and they had a really successful airdrop. Right. So anybody who bought that point portion, they did really well. I don't remember the exact numbers, but easily over 10x your capital on buying the points. And then for the fixed rate lenders, basis was really high during that when they launched. It was Q1 of last year, so markets were ripping, funding rates were high. So the lenders also made out really well. They probably made like 15 to 20% yields during that period.
So you're holding stake DNA, right? SENA that you're putting into Pendle, but you don't get the points because you're selling.
You're holding the stake USDE. So you're holding their stable coin.
Yeah. What am I talking about? Yeah, you're holding USDE. So you get that. So you get the yield that's produced by the basis trading, but you're foregoing the points.
At some
like
the speculators, they get all the ENA airdrop. So basically, because normally you get both the yield and the airdrop. Now they're just saying, okay, all the airdrop goes to these guys, the residual yield goes to the lenders, and then they just kind of split it up into two products. And so that's the trade. You got speculators and you got lenders, and they can cleanly separate the two.
I like that. I like that product a lot. It's like it makes a lot of sense. For example, you remember when people were buying BNB so they could get the airdrops on Binance, right?
Yeah.
Like a lot of people would like to do that, but not hold the BNB, which they should have done. But so people were like borrowing this BNB somehow, and it just makes it a bit easier.
Yeah, no, exactly. So I think that's what Pendle does really well. They just kind of make it easy for people to get their airdrop without having the capital, and both sides kind of benefit from it.
Does that somehow plug in with term finance? Is there like some do people like connect this somehow?
Yeah, so the PT token, that's the yield to fixed rate portion of it. Those yields are usually pretty juicy because it's subsidized by the speculators, and a lot of people like to borrow against that collateral. So say, like right now there's a Athena USDE token that's yielding around 12-13%, maturing in September. So if you can buy that token, leverage it up 8 times, borrow at a fixed rate through term at like say 10%, your all-in leverage yield is around 35% annualized.
Okay.
So, in terms of only place where you can lock in your fixed rate through the maturity. So if you're borrowing on something like Aave, the rates can fluctuate, and things can really spike and like flip that spread from a positive spread to a negative spread. So you're always like checking your phone, seeing if the rate needs to be rejiggered. With term, you don't have to worry about that. So that's
Yeah,
really
I've been there. That's why I didn't want to do all this like wacky DeFi stuff, which I guess would be a couple of years ago, because I would have to borrow the money, and the rates on Aave back then, it could fluctuate between. I'll just make it up. You'll know better, but it would be between like below 5% and above 15%. And so at 5, I'm doing good. At 10, I'm like alive. But at 15, all this button pushing is actually costing me money, and there's no forecasting. The interest rate is it honestly it looks like it's insane because it's just how come on Aave it fluctuates so much in such a short time, like
yeah.
from yeah.
So they call that the kink. So what happens is the way Aave works is you can pull your liquidity anytime, right? There's no lockup. But if the money's being borrowed out, there's no money available or sitting around to return to you when you call your money. So what they do is they need some mechanism to keep like 10% sitting idle so that people can withdraw. It's kind of like a bank account, right? They don't deploy all their capital. They got to leave some in cash just in case people pull out cash. So Aave works the same way. So what happens is when the utilization of the deposits starts to go above 90%, they start spiking the rate. That's why you'll see rates will spike sometimes multiple times a day through over 60% intraday. And that's what encourages lenders to repay or borrowers to repay. And it also encourages new lenders to come deposit. So that's why they have these crazy spikes, because they need to do that in order to get their utilization back down to 90%. Otherwise, your money's stuck, right? If 100% is borrowed and nobody wants to repay their loan, you're not going to be able to get your money back.
Right, but they'll just push the rates up to, I assume there's a maximum, and then people will repay
Exactly.
quickly,
So yeah, they push up
very quickly.
Exactly.
Do people arbitrage between not arbitrage is a bad word, but do people try to kind of arb between Aave and term finance? Like
theoretically you could, especially with Pendle, because Pendle's able to turn it into a fixed rate. I think the problem is it's just not juicy enough, right? Because first of all, the variable rate is hard to predict, and the yields aren't high enough to make it worthwhile. Whereas they can just go do a Pendle token and make 30% leverage yields. It's much easier. But yeah, your experience is exactly why a lot of users come to us, because you don't have to worry about that.
Yeah, I gave up very, very quickly, and then I went to, man, this is so classic DeFi. Because what I'm trying to do is just leverage bet on Bitcoin, right?
Yeah.
So I deposit BTC on Aave, I borrow USDT or whatever, and then I buy more BTC and I deposit that on Aave and so on.
Yeah. So
A lot of button clicking, so it's very satisfying as well. But then
Exactly. Yeah, DeFi UX is great. It only takes
it's
40
so good.
minutes to loop.
But then the rate shoots up. But then I found out about Spark, which is like the 8th time they rename MakerDAO.
Yeah.
It has some other names too. So then I figured out they have like they don't have a fixed rate, but there's some like central bank on Discord somewhere, that's deciding what the rate is. And it was much lower. So I thought, genius. I'll just go on that one because it's always the same. But then I worked out that there's some discussion forum where they say, should we double it? Yeah,
Yeah.
okay, we'll double it. I don't know how long it was, if it was days
No, they've done
or
that
weeks.
before. Yeah, they'll do it overnight, and that's not very.
Yes.
They don't have tweets about this. You can't really
No.
follow any channel. All of a sudden,
Oh, yeah.
you check, oh shit, my rates are like 12% now.
That happened to me while I was looped. And I thought, okay, well, at least it's better than Aave. So I'll just stick in and hope they reduce the rates again. But then they removed the option to use wrapped Bitcoin as collateral because Justin Sun got involved or something, right?
Yeah, they bought it from.
Yeah. So now I have to change my wrapped Bitcoin, which I don't like, into Coinbase Bitcoins, which I like less,
Yeah,
to use the thing. But then the cap is reached, so I'm in this like.
you should come to term. We'll give you some. Liquidity, fixed rates.
Yeah,
Come to
but you
term.
know what I mean about this is like very classic DeFi experience where it's not a rug pull, but the
It's too
but
much
the
uncertainty. It's too volatile.
yeah, it's just like the rules are changing all the time.
So
But I
that's
guess
what we
that's
do.
just
We're trying to fix that. Fixed rates. So yeah, we got a lot of borrowers who come borrow against Bitcoin, CBBTC, or wrap Bitcoin, either one. We support both. So yeah, maybe we can help you out there.
cool. Do you wanna? Are you guys? What's the thing with that points program? What's the deal?
Oh, the term points program?
Yeah.
So the season 1 ultimately led to an airdrop, and that was end of March of this year. Season 2, we haven't really announced anything specific, so that's still kind of TBD. I think at this point we are, focusing on traction, building out the protocol. We have some really exciting things coming up, just really trying to enable looping, make it a lot easier for you to do this looping without having to spend 40 minutes to do that. Doing some intent-based lending to make it easier for people to match trades outside of these auctions, and just like overall smoother UX. Because like you said, DeFi really sucks. It's hard to use.
Mm-hmm.
So right now we're really focusing heads down, just building out our V2.
Cool. And we can where can people keep up to date? I know you guys are you're constantly posting updates as well on X. It's term_labs, right? That's
that's our Twitter. And there's a link tree in our profile. Check out our website at app.term.finance. And and our Discord. You can find all those through the link tree.
Nice. Very cool. Anything else you guys wanted to run through, or should we wrap it up there?
I'm looking at the vaults already, so I'm kind of gone here. I'm looking at the term finance vaults, but there's a lot of stuff. I'll have to look at it after the recording.
Nice.
Cool.
No, I mean, we got everything from you. We got the 180K price prediction. You said, and you told us that interest rates being high is bullish for spot holders. So no, man, we have everything.
Yeah, I'm a Bitcoin maxi myself, so I don't know. I'm just talking my book.
Even better. All right.
But thanks for coming on. Really appreciate it.
Thank you.
Let me.
Yeah, I really enjoyed it. Thanks, guys.